Hey everyone, and welcome to Earnings Cheat Sheet for Friday, February 7th. It's Alexis, Garcia, and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. And Ed, it seems like we have some leaderboard stocks here coming up this week. So what do you got for us?
Yeah, we have a few stocks that are acting very well. Shopify, AppLovin, and DoorDash.
All right, well, let's start with Shopify, which is scheduled to report Q4 earnings on Tuesday, February 11th. Earnings are expected to rise 24% to 42 cents per share, and revenue is seen climbing 24% to $2.655 billion. And here's where we're watching Shopify. We'll be looking for any commentary about foreign exchange or currency conversions in the wake of Trump tariffs. And we'll also be paying attention to 2025 margin and gross merchandise volume outlook. So, Ed, it seems like streamlining has really been the name of the game for Shopify over the last year or so. It sold off some of its logistics business to Flexport, and at their December 5th Analyst Day, the firm touted several growth drivers, including expanding its offline point of sale services. So, what are you looking at in terms of Shopify here ahead of earnings?
Yeah, now that it's streamlined, it's probably the growth rate may slow down a little bit just because that was sort of special factors that got them out of something money losing, but it's really just been a solid performer, solid, strong revenue growth, pretty powerful earnings growth, which again might start to slow down, but want to see the signs of that are, foreign exchange has been a problem for a lot of companies. This is a Canadian company, so that could be plus or minus depending how you translate it this way, and then you translate it back into US dollars. Tariffs could be a concern. That's been suspended, but so their commentary on that, I think they were trying to be fairly low key on it. They don't want to annoy anybody on that front. But this has just been a real leader. It's prone to these big corrections and then big rallies, and so I think growth investors are hoping we're going to get to the latter in the coming months.
All right, well, let's look at the chart, Ed, because you talked about big rallies. We had one on January 28th. The stock rose about 9 or 10%, but it looks like it cleared out of what could probably be considered a double bottom base here.
Mhm.
It's officially on market surge in consolidation, but it looks like it's dipped back below that buy point. So, what are your thoughts with the technicals?
We are sort of treating this, well, not we, because I'm not on leaderboard, but I think IBD leaderboard is considering this a double bottom. I think if it's at a double bottom, it's meets those criteria. It certainly was an early entry. You could have bought it when it cleared that day. Even earlier in the day, there was a trend line entry, but that seemed like the time to be buying it when it got above that trend line or above 115. It did get shake. There was a shakeout. I mean, so a few days ago when there was some heavy selling going on with concerns about tariffs. I mean, honestly, and that was going to hit this company probably in some ways, but bounced right back, found support there. So it's acting well. The problem is right now is that earnings are coming up. So at this point, probably have to wait and see. You probably could use that 120.72 as sort of an alternate entry, especially since it's consolidating there. So if it moves out from there, that'd be fine. This again, this is a stock that came out of a pretty deep base a few months ago, gapped up on earnings, and then it sort of moved sideways. It held those gains. So so this is prone to big gap ups and gap downs on earnings. So it may not prevent an easy opportunity except with an earnings gap up, which is just, can be a little trickier in a choppy market. But yeah, it's looking very strong right now.
And can you talk about looking at those earnings gap ups, particularly for viewers who may be new or inexperienced with handling those? What
I
do you
mean, earnings,
typically look for?
yeah, I mean, earnings gaps. I mean, look, it's a powerful sign. It says that because the market is not priced in the power of either earnings or earnings expectations, that they have to reprice it. And so sometimes it takes a while because then funds are buying up and they can't necessarily do it all in one day. So it can be really strong. You can buy it right on the earnings gap that day, or you can look whether, waiting a little while after, waiting in a little while of trading to see how it goes, or you can wait to see if it can pause for a few days, see if that can set up. So there's different ways of going about it. I usually wait for a few days if I do it at all. I'm just not prone to that, but that's often a way. You wait for a few days, see if it holds those gains and then moves on to new highs. That's often a way just to see if it's for real. It's settled down, it's had a chance to sell out, and now you have a chance. Now it's moving again. So that can be a way to get into these things because it really can be a really powerful sign of strength in a stock.
All right. Well, it's all about risk tolerance there, Ed. And let's just take a look at the weekly chart really quickly. You talked about this previous base with the depth of 47%. And again, we see earnings growth here really strong. But what else is standing out to you in terms of fundamentals? In terms of
Yeah,
fundamentals?
the fundamentals, I mean, it was really, really strong. And so that's where the comparison is getting tougher. I mean, there are some easy comparisons and now there's very tough comparisons. And so there's coming in on that front. So it's been slowing down a little bit. The revenue growth is still holding pretty strong. I
I
mean,
mean,
that's a
sales
real
growth is really solid as well in the low to mid 20s.
absolutely. So that's been a real strong, sense there. Again, we're probably going to go into strong double-digit growth for our earnings, but that's been a real performance here. It looks like that should be pretty solid in 2025. It may not, it may be calming down after some big changes in the business over the last few years. First doing one things and then getting out of those things, but ultimately its core business is doing very well, and I think analysts are expecting that to continue.
All right, well, let's move on and take a look at AppLovin, which is scheduled to report Q4 earnings on Wednesday, February 12th. Earnings are expected to rise 155% to 125 per share, and revenue is seen climbing 60% to $762 million. And here's why we're watching AppLovin. It was one of the best performers in 2024, and we're going to be curious to see their efforts to diversify beyond delivering ads to mobile gamers, if those efforts are gaining traction. And we'll also be looking to see if they're including their e-commerce push in its ad platform. So, Ed, AppLovin got a price upgrade last week from Jefferies. Analyst was very bullish that AppLovin would benefit from a forecasted acceleration of mobile game ad spending growth in 2025. So, what are your thoughts here?
I mean, first I want to say I have a position in AppLovin, so I don't have it for very long. So I've got decisions to make, and I'll talk about that a little bit. But the earnings have been tremendous, and it really took off. There's something, and I didn't catch that first rung, but when you have a stock that really transitions into profitability, and it really took off this past year in that sense, you can see tremendous risk because every dollar with often these software companies essentially goes to the bottom line, as opposed to a lot of things like when it's a general retailer, they might get 5 cents, 10 cents, on the bottom line. It really translates. The earnings growth is amazing still after a lot of big gains. I just want to see that kind of momentum, how long that can continue. Are they moving into a little bit of e-commerce, other things on that front? But because and can they keep that momentum? The growth rate is probably going to have to slow somewhat, but you want to see if that can be really strong for you know well into 2025.
All right, well, let's look at the chart, Ed, because as you said, you have some decisions to make, but we're on the daily here, technically building the right side of this cut base with a 417.63 buy point. This again is another leaderboard stock, and I think they were keen in on this January 22nd high of 371.77 as a potential handle entry here. But what are your thoughts with the technical action? It's getting closer to this 400 round number as it moves up this side of the base. So yeah, tell me about AppLovin.
Yeah, I mean, you can see on when it was running up, you can see all those volume spikes. There was just tremendous volume coming into that. So I just want to point that out. And at the top of the base, there was a couple little ants, and that just shows you that heavy volume. And that's often a sign, ants, that's often a sign that maybe the stock is about to peak actually, but then what you do want to look for is the next base. Now, sometimes that base will be a few weeks, take a while. And so that is worth watching for those reasons. Yeah, there was that sort of handle thing. It was too low to be a proper handle, but you could sort of view that as an early entry, but it did sort of moved around. It's pretty messy. It's hard to see that. I mean, it's hard to see that pretty easily right now. Earnings are coming up. You just don't know how this is going to go. If this disappoints, you could easily imagine a huge loss. I'm up like 15%. So my inclination would be to hold in those situations when over 10%, but you just never know in that situation. I think if you could just scroll over and see how much it's above the 50-day line. And now the problem is it's, again, even if you weren't, it's 10%.
About 10, yeah, 10%.
Even if it weren't for earnings, it'd be a little bit That would be one little issue. It's not crazy extended, but even if there weren't earnings, ideally, not for me necessarily, but ideally maybe you'd have it pull back some before earnings and then move on earnings, providing a little bit more of an opportunity. But that's just something, it may not provide an easy entry here. Because if it did gap up to say 420, it might technically be just in a buy zone, but then it would be really above the 50-day line. And again, it'd be more like an earnings gap at that situation. So again, ideally it would settle down, let something catch up a little bit, but when you're running this fast, sometimes these stocks just don't provide much of an opportunity. This is the first base it's had since this mammoth run, which I missed out on.
Yeah, I think Ali is kicking herself too because I think she also missed out on that a little bit. Yeah, it sounds like you have a cushion, Ed, in this stock. So maybe walk through like some of the decision making or the things that you're looking at in terms of, if people are in this stock, what are you considering here up until next week?
Generally, I like to have a 10% cushion in a stock. I mean, unless the position is very small or if it's very stable, but this is one that might move a lot. And so you'd probably want a bigger cushion regularly. Again, everybody has their thing. Some people say, I'm just going to hold everything, whatever, but you have to know that you're going to have some real nasty issues. Sometimes you'll have amazing events. If you bought, say, at that one area around 370 or so, there's not really much cushion. If you bought it around there, there's not really any cushion. So you could easily wake up to a 10, 15% loss after earnings. And so that's the kind of thing. So again, a stock with a big, average true range, there's the potential for things I think that you'd want to have a decent cushion, but you want to have that strategy. You want to stick to that. You want to have, there might be little modifications based on the particular stock and the size of your position, but you want to have consistent rules. You want to make gains, you want to ride those things. And again, you don't have to sell everything. Like if you had a small gain, you could sell half of it, or you could do an option. So it's not like that's it, I'm out. Just do something that if you don't have much of a cushion, you probably want to think about, portfolio protection in addition to trying to ride for big gains.
All right, before we move on, Ed, any thoughts on the weekly chart here? Anything standing out?
Wow. I mean, just there haven't been many opportunities. It did have like that when it gapped up on earnings. There was a spot where it touched the 10-week line just before that, but this is the first real base since then. And so I don't know, is it long enough? We'll see. But this is something also for the future. When you miss a stock, don't necessarily go chasing it. If it's a true market leader, it will set up again and it will break out again. And there's a plenty of stocks that if we look, what we call our model books, we used to put out these model books, these stocks that had already gone on big runs. And then you see this nice base and then you see, oh, they go up 300% over the next 62 weeks from here. So just in general, I would say, with these hot stocks, don't jump into them really extended, wait for a real proper entry for them.
All right, Ed. Well, great tips there. And let's move on to our next name, which is DoorDash. That company reports earnings on Tuesday, February 11th. And the food delivery app is expected to see Q4 earnings swing to 34 cents versus a 39-cent loss the previous year. And analysts expect revenue to rise 19% to $20.93 billion. And here's why we're watching DoorDash. We'll be looking for commentary on the company's push into new markets, coming with grocery and international, as well as any information on DoorDash's partnership with Lyft. So Ed, it seems like DoorDash is really expanding beyond food delivery. It's inked deals with Lowe's and Pet Supplies Plus. So what's on your radar with DoorDash here as earnings approach?
Yeah, I think people do want to get some sense of that kind of expansion out beyond being that limo for burritos. So it's there's and people complain about food not being fresh, but if you go with Lowe's and other things, people aren't probably going to be so upset about stale building supplies. I mean, I could imagine that could be useful, and it's just a better maybe utilization of this sort of fleet that they have. This one, again, in 2024, they turned profitable. As they consistently profitable, that's what's going on, and the tremendous growth is seen for 2025. Again, when you're essentially a software company, what they are. I mean, I know that there's a little delivery, but the site is essentially that. The app, you just get a lot of money back. You really can translate that. It's just been really amazing growth. And that and the stock has been showing that for the past couple of years. People saw that that shift towards growth.
And we're on the chart here, Ed, and on the weekly chart, you can see 576% estimated growth here in 2025. And I'm on the weekly because we can see this base here better, a flat base with a 181.78 buy point. DoorDash broke above that. Again, another leaderboard stock here, and it's now extended above that entry. So what are your thoughts here on the chart?
Yeah, it had an opportunity maybe a couple of weeks ago, especially when it was moving off the 10-week line, 50-day, because not only because I think early entries are nice to get, but it gave a little bit of time for before earnings. When it was fully breaking out, say last week, it's like, well, there's not a lot of time before earnings. Now, it may still continue to advance, and you might have a big enough cushion, but that just makes it tough. But I don't see an opportunity to buy here. But boy, nice thing, it made a big, strong move, very tight base, really didn't move that much. I mean, that was a 10% deep, 5 weeks. This didn't want to stop. I mean, it was impatient, kind of thing. We want to move. We want to go. We want to go. And just nice action. The only thing that is that there hasn't been much volume in this last few weeks. You see, there was much more volume on that prior run. There was definitely some weeks with really strong things. Now, the volume maybe has picked up from a couple of the weeks in that base. And so it's not been anemic, but that's the only thing. And I'm really nitpicking here. It's just because it's really strong price performance. The relative strength line is at highs, but I think you just need to wait for another opportunity that's already extended.
All right, Ed. Well, those were some of the few big ones on our radar, but there's always more, of course. Let's take a look at HubSpot, which also reports on February 12th here, Ed. And again, we're on the weekly. This one broke out here of a flat base. Talk about depth here. Another one, 10% over 7 weeks. Really moved powerfully above that 10-week line and is in a buy zone. So what are your thoughts here?
Yeah, I mean, the prior base was pretty messy and there's an ugly sell-off. That's partly because there was buyout talk about Google and that it actually had broken out of a prior flat base on that. But then it's like, well, Google really wasn't. And so it sold off. But so it was an ugly base that big cup base that came after that was sort of a messy, deep base. So often what you'll see is that, okay, maybe that seems a little messy. Maybe you wait for a cleaner, tighter base, right next to it or just above. And that's what it's done. It's in a buy zone, but yeah, you probably want to wait for earnings or do an options play. But yeah, doing very well.
All right, well, let's take a look at Reddit then. They also report on February 12th. And I mean, this one has just been a real high flyer here, Ed. We're still on the weekly. Um, it's 20% above that 10-week line. I could switch back to the daily if we want to see in detail. But um, what are you hoping to set up here, or what are you hoping to see where maybe investors can get a piece of this if they're not already in it?
Yeah, I don't know what it's going to take a while. I think you need a real base at this point. I mean, a couple of times it sort of touched the 10-week line, but those were sort of messy. It wasn't like this clear situation. They sort of came down, and then by the time it sort of really made it through, it had already gone up a ways. Obviously, this is anytime, but anybody buying at any time would have worked out. But I think you just need to wait for it to settle down, and get your opportunity then.
All right, well, let's take a look at a semi-equipment maker, Applied Materials. And we're on the weekly here. And this one seemed to have hit a high the week ending July 12th in 2024, but it's really kind of faded off of that since. It is now trading below that 40-week line, but it looks like it really moved above, or at least is holding above that 10-week moving average.
Yeah, some chip equipment makers, which have already reported, also had somewhat positive thing, but they're looking like this. They've had real sell-offs, and honestly, a lot of non-AI chip makers sort of look like this. So you want to see this repair, but you want to get some sign, like what's going on. So this one, it's an important stock, but the technical action has not been good and really needs to do a lot before I think it would be interesting again.
All right, so that's Applied Materials. They report February 13th. Let's look at another software name, Ed, which is Monday.com. Again, we're still on the weekly here. This one sold off pretty badly towards the end of the year, uh, but it looks like it's trying to come back up, and it have sort of what we call that golden cross here, and a nice gain so far this week, moving above that 10-week moving average.
Yeah, there's sort of, you could see a trend line. It's sort of getting above the 10-week. I don't know. It just seems interesting. We'll see how it goes. It would be nice maybe if it could get up to the 300 level and then maybe form a handle, just sort of show some strength here. This made a nice run, but yeah, it's last couple of patterns. It's had some trouble with the last couple of breakouts. So we'll see some strong earnings. It's supposed to slow down, but a lot of things are supposed to slow down next year. But yeah, I think this one has some repair work, but not it's still something to be watching.
All right. Well, we'll be watching on February 10th for Monday.com. Let's take a look. Another software name, Ed. That's Datadog. Again, we're still on the weekly here. In consolidation, 170.08, an official buy point, but looks like it's inching closer to retaking that 10-week line.
Yeah, it sort of made this big, powerful move after earnings and with some other software makers and given up a lot of that back, basically to the top of that prior consolidation. I suppose if it got above the prior week's highs, you can sort of see that little pop up and then fade. That might provide an early entry off of earnings. Is this the best name in, it seems like there's some other software names that are looking better. Not that this can't, though. It does have some pretty solid growth. It is pretty volatile. It sees some big ups and downs. And I don't know if this pattern it's not as volatile, but it's not like a tight base like the way we've seen with some other names.
All right, well, let's wrap it up with a look at Cisco, Ed, because this one was in a flat base, 60.23 buy point in that buy zone, but we see some nice tight action here as the 10-week line caught up, but nice move so far this week. So what are your thoughts with Cisco and the technicals?
Yeah, could we just go to a monthly actually on this one? And the reason is because if you look at that relative strength line, it's bouncing back recently in the last few months, but it's been slumping for quite a while. I mean, it basically peaked in 2000, went sideways for a long time, and then trended lower since 2018. So it just isn't. Now, I guess contrast that to ANET, Arista Networks, which is sort of the one that's sort of taken up the leadership in that front. That one has a much more powerful. That one doesn't have any buy point for it, but you can see how this one's been performing much better. And Cisco's fundamentals just not as strong. Now, it's still big. It's more to me, I'm more interested to see what they have to say about what they're saying about IT spending, what their trends are. But it just seems like, it hasn't transitioned out of things. And so the earnings and revenue are falling when you've seen a lot of other companies with pretty strong growth. And yeah, maybe the earnings will pick up next year after 2 years of declines, but still below, just barely getting to 2023 levels. It just, I don't know, it just doesn't, it seems like there's a lot of other things that are moving faster. I don't know if this could ever come back again, but it still looks like it's still trying to find itself like some of those other tech giants that slowly turned around. This one hasn't really made it happen yet.
Well, Ed, I think we're all trying to find ourselves in this crazy world, but we'll definitely keep an eye on Cisco earnings. That is February 12th. And Ed, thank you so much for your insights. And that wraps it up for this episode of Earnings Cheat Sheet. If you want even more market analysis, be sure to tune into Stock Market Today with Alyssa Coram. That goes live after the closing bell. And we'll see you right back here next week.